What if I told you that every time you feel the urge to sell your crypto, someone far richer and more powerful is on the other side of that trade, quietly buying what you let go? They are counting on your boredom. They are waiting for your fear. Because what feels like the end of the party is actually a carefully planned deception. This isn't the end, it's an illusion, and I'm about to hand you the playbook that reveals their entire strategy. This is the hidden story behind the great crypto deception of 2026. Let's be brutally honest. The crypto market in April 2026 feels like a ghost town. The wild energy is gone. The price of Bitcoin has been trapped, moving sideways between $66,000 and $76,000 for what seems like an eternity. After the vertical climb, we've slammed into a wall of absolute boredom. The news has stopped talking about it. The get-rich-quick crowd has vanished. The same friends who desperately asked you for tips last year are now completely silent. But this silence is where the trap is hidden. The story they want you to buy is that the gold rush is over, that you're too late. But while you're doubting your decisions, do you know what the biggest financial institutions in the world are doing? They are silently accumulating. This boredom isn't a market condition, it's a weapon, and it's designed to make you fold your cards right before the dealer reveals a winning hand. So who is behind this masterful illusion? Who is they? Forget about shadowy hackers. They are the most famous names on Wall Street, the BlackRocks, the Fidelities, the very banks that spent years calling crypto a joke. And now, they are methodically buying up as much as they can. Their objective is brilliantly simple: create so much fear and boredom that you sell, allowing them to load up at prices you'll wish you had. Here's a glimpse into their secret operations. First, you have to see the ETF shell game for what it is. They will blast the headlines with news of a single day of outflows, flashing a scary red number to convince you that the big money is getting out. It's a classic magic trick. Look over here so you don't see what's happening over there. Because if you zoom out, the real story emerges. While they cause panic over daily noise, March saw a massive influx, with reports showing over $1.13 billion in net inflows, breaking a 4-month losing streak. They are counting on you to react to the daily drama, while they are investing for the next 5 years. Second, the blockchain tells a story the news won't. While the price stagnates, a secret migration is underway. On-chain data reveals that enormous wallets, the kind owned by institutions and crypto's old money, are moving their Bitcoin off of exchanges and into deep, dark, cold storage. This isn't the behavior of someone looking for a quick flip. It's the ultimate vote of confidence. They aren't buying to trade, they are buying to hold. While amateur traders are getting crushed by the volatility, the smart money is quietly taking their supply off the market, preparing for the moment when demand skyrockets. And third, the evidence is hiding in plain sight. Just look at the infrastructure they're building. We're seeing credible reports that giants like Charles Schwab are getting ready to launch spot Bitcoin and Ethereum trading for their millions of clients. Banks like JP Morgan are already running billions of dollars in daily transactions with their own JPM coin. You don't build billion-dollar bridges to a dying city. They are constructing the highways for a flood of new money, and they're doing it now, while everything is quiet, hoping you won't notice. Why is this all happening now? Why is 2026 the year circled on their calendar? This isn't a random guess. It's a calculated convergence of 3 powerful forces they are banking on. First, their playbook is built on the Halving Echo. Look at history carefully. Every major crypto bull market has peaked about 12 to 18 months after a Bitcoin halving. This isn't random. It's a repeating pattern that the smartest money in the world watches closely. The 2012 halving led to the 2013 peak. The 2016 halving powered the 2017 frenzy. The 2020 halving created the 2021 top. These are not coincidences. They are cycles driven by supply shock and human behavior. Now think about where we are today. The last halving was in April 2024. We are now sitting directly in that historic launch window, right in the same phase where previous markets started accelerating. The supply shock is already here. New Bitcoin entering the market has been cut, while demand is slowly building in the background. This isn't a theory, it's a blueprint that has worked 3 times in a row. And the people who move markets don't ignore patterns like this. They prepare for them. They position themselves early, and right now, they know the fuse has already been lit. Second, the entire financial world is about to shift. For years, crypto has been fighting an uphill battle against rising interest rates. Money was expensive, liquidity was tight, investors were cautious, risk assets struggled, and crypto, being the highest risk asset, felt that pressure the most. But that environment is changing. The Federal Reserve has already indicated a pause, and markets are now anticipating potential rate cuts. That may sound like a small change, but in finance, it changes everything. When governments start injecting money into the economy again, that capital doesn't just sit still. It moves, it searches, it looks for growth. And where does it go? It goes to the assets with the highest upside potential. Stocks, tech, emerging markets, and right at the top of that list sits crypto. The same force that once pushed crypto down is now preparing to push it up. The economic headwind that held crypto back is slowly turning into a powerful tailwind, and the institutions are positioning themselves before that shift becomes obvious to everyone else. The third and most crucial part of their playbook is the narrative machine, because bull runs are never just about charts and numbers. They are driven by stories. Stories that attract attention, stories that bring in new money, stories that make people believe. And this is where institutions are the most powerful. They don't just invest in markets, they shape the narrative around them. And right now, they already have their scripts written. The narratives for this cycle are about tokenizing real-world assets, building decentralized physical infrastructure, and merging AI with blockchain. These aren't just buzzwords, these are massive industries. Multi-trillion-dollar opportunities that are slowly being integrated into crypto. And as these ideas spread, as media picks them up, as influencers talk about them, they create belief. And belief brings money, and money drives price. This is how the cycle works. First, they accumulate quietly. Then they build the story. Then the world catches on. And by the time the average person understands what's happening, the biggest gains have already been made. First, follow the smart money, not the loud money. Turn off the financial news networks designed to trigger your fear. Unfollow the influencers paid to make you panic. Instead, watch the data. Watch the institutional ETF net flows on a monthly basis. Watch for large wallets moving coins into storage. When they use fear as a smokescreen to accumulate, that is your signal to accumulate right there with them. Second, you must master the game of capital rotation. History suggests the cycle will follow a predictable path. It starts with Bitcoin. As the safe crypto asset, Bitcoin will likely be the first to break out, absorbing the market's attention and capital. Once Bitcoin hits a new price level and stabilizes, that money will start looking for its next target. It will flow first into Ethereum, and then, like a flood, it will pour into high-potential altcoins, specifically in the sectors they've been priming: AI, RWA, and DePIN. Your mission is not to chase what's already pumping, but to be positioned before the capital rotates. Third, you have to start thinking like they do. They don't have dreams, they have targets. The institutions buying Bitcoin at $67,000 aren't aiming for a small gain. Their internal models, which they never share publicly, are based on historical cycles and future demand. We hear whispers from analysts at firms like Bernstein and Standard Chartered, even after some revisions, of targets ranging from $150,000 to $200,000 or even higher. They are playing for a multi-trillion-dollar prize, and you must adopt that same long-term mindset. Finally, and this is the most difficult rule, your greatest weapon is patience. The entire purpose of this great deception is to exhaust you, to bore you into submission, to make you sell your assets out of frustration just moments before the market ignites. The hardest move in investing is often to do nothing at all. Holding strong and sticking to your plan when the market is quiet is what will separate you from the crowd. It's what separates those who build life-changing wealth from those who merely provide the exit liquidity for the institutions. Let's put it all together. The boredom you're feeling has been manufactured. The scary headlines are a weapon of distraction, and while you've been made to feel like you've missed your chance, the world's most powerful financial players are quietly, systematically buying crypto. The unstoppable force of historical cycles, the coming shift in the global economy, and the powerful new narratives are all beginning to align. The great crypto deception of 2026 isn't a funeral for the market, it's the eerie quiet before the hurricane. It is the final test before the real wealth is made. And now, you have their playbook. Like and subscribe, and leave your thoughts in the comments. I'll read them all.